All right, good afternoon. I wanted to share some different information that I came across in some of my research recently. And this is called the Lazy Retired Investor Strategies. And I'm just going to run these by you and see what you think. But this has been apparently is a very popular method with a lot of wealthy advisors that use this. And that include the Vanguard founder, Jack Bogle, or Bogle, however you pronounce it, B-O-G-L-E. There's an advisor, an author called Bill Schultzweiss. Anyway, he wrote the book, The Coffee House Investor. And then, of course, there's some other folks as well. But I thought it was very interesting because the whole method is, and this is an example of how they split up the investment, is they do 40% bonds, 40% stocks, and 20% in international stocks. And I thought, well, that's pretty good because that's a pretty aggressive portfolio to work with. I'm huge right now, like fully vested in all stocks right now. The S&P 500 has returned famously this year, and it has a very good track record of doing well all the time. Like the year-on-year 50-year average is 11%. It's pretty hard to beat that for just basically a very lazy way of investing. Put your money in the S&P and maybe some money in some treasury bonds or some other types of mutual funds, and then you just let them coast and let them ride because everything's got an ebb and flow either way. So one of the things I like about it, though, is that they use 2 to 4 different low-cost index funds. And of course, all the big institutions and investment places have those, such as Fidelity and Vanguard and Merrill Lynch. So they all have some very low-cost index funds that you can work with. So some of those would include the U.S. Total Stock Index Fund. There's a U.S. Bonds Index Fund, which is a good way to go in because then it diversifies your mix in the bonds as well. The international stocks investment funds, and then there's the real estate investment trust, which is all your money gets pooled together and they buy or invest in real estate. So that's something that I've dabbled or talked about doing before. I've never found any for sure, but I didn't realize there was an actual index fund that you can get involved in that makes it easier. So you just throw your money in there and then it diversifies from that point on. But the whole point of this operation is to keep things very simple and don't overthink it. You're not trying to beat the market. You're not trying to time the market. You're just investing in a diverse portfolio of leveraged areas that offset each other in goods and bads and ebbs and flows. And I really like the idea that it's a broad diversification and they keep the cost low, and you only have to do some occasional rebalancing. And that would be if you decide you want to get out of some international stuff and maybe go with more U.S. stock-based, etc. So I love the idea of it. I'm going to look into it some more. Some of the information I found is a lot bigger, a lot broader than what I've shared today. I'm just going to keep this short because this is my first time kind of hitting it. But I love the idea of being a lazy retired investor. I'm kind of doing that now. I don't monitor my money every day because it doesn't make any sense to do that. We're in this long term. Think of it long term. The only thing you're not doing is trying to pick a stock. It's really nice to just throw your money into a safe market that has a good track record and let it run. Anyway, that's all I got today. Leave a comment down below or a like if you enjoyed the video, and we'll talk next time.